In 2025, the debate between crypto and stocks as wealth-building tools is more relevant than ever. Let's dive into the key aspects: risk versus reward, accessibility, passive income potential, and long-term growth outlook. Starting with risk versus reward, cryptocurrencies like Bitcoin have shown incredible volatility. For instance, Bitcoin surged from around $7,000 in early 2020 to over $60,000 in 2021, only to drop back down to around $30,000 in 2022. This kind of price movement can lead to massive gains, but it can also result in significant losses. On the other hand, stocks, particularly the S&P 500, have historically provided a more stable growth trajectory. Over the last decade, the S&P has averaged around 14% annual returns. While stocks can also experience downturns, they tend to recover over time, making them a safer bet for long-term investors. Next, let's talk about accessibility. Investing in stocks has become incredibly easy with platforms like Robinhood and E-Trade, where you can start with no minimum investment. You can buy fractional shares, making it accessible for anyone to start investing with just a few dollars. In contrast, crypto platforms like Coinbase have also simplified the process, allowing users to buy fractions of coins. However, some cryptocurrencies require a more complex understanding of wallets and exchanges, which can be a barrier for new investors. Now let's explore passive income potential. Stocks can provide dividends, which are a great way to earn passive income. Companies like Apple and Microsoft have consistently paid dividends, allowing investors to earn while they hold. In contrast, crypto offers options like staking, where you can earn rewards for holding certain coins. For example, staking Ethereum can yield returns of around 5 to 10% annually. However, the mechanisms and risks involved in staking can be complex and vary widely between different cryptocurrencies. When we look at the long-term growth outlook, stocks have a proven track record. The S&P 500 has historically trended upward, benefiting from economic growth and innovation. In contrast, the crypto market is still relatively young and can be influenced by regulatory changes and market sentiment. While some believe that cryptocurrencies will revolutionize finance, others caution that they could face significant hurdles. To illustrate these points, let's consider the returns of Bitcoin versus the S&P 500. Over the past 5 years, Bitcoin has seen incredible highs and lows, with returns that can outpace traditional investments, but also significant dips. Meanwhile, the S&P 500 has steadily climbed, providing consistent returns with less volatility. In conclusion, both crypto and stocks have their merits as wealth-building tools in 2025. Stocks offer stability and passive income through dividends, while crypto presents high-risk, high-reward opportunities with staking potential. The choice ultimately depends on your risk tolerance, investment goals, and how much time you want to dedicate to managing your investments. Before I wrap up, don't forget about our $250 giveaway. Stay tuned for details on how you can enter. Whether you choose crypto or stocks, make informed decisions and invest wisely.